Hi everyone, we're Matt and Chelsea. We're the owners of Hancock Real Estate, and we think every real estate experience should be a great one.
So in today's video, we want to address some of the words and phrases we're seeing out there on media as they pertain to real estate. And today specifically, we're going to talk about mortgage interest rates. All right, so a couple of phrases that have come up in the last few weeks for us around our office and what people are hearing in the media is things like the Fed's lowering interest rates to 0% and the market being volatile. So we wanted to address those two things, particularly what they mean for mortgage interest rates.
Yeah, now let's clarify. When we say the markets, we're not talking about stock markets because that's been volatile. When we say the market, we're talking about interest rates on mortgages. That's it. That's the market we're describing, and that has been volatile. So we've got a client we're working with right now, and last week on Friday, their rates were set in a certain spot. They changed. Can you go through that?
Yeah, so Friday, March 20th, I had a client pre-approved for a conventional loan with a 700 plus credit score because credit does matter with interest rates. So that buyer was quoted a 3.99% interest rate, which I do want to add is a historically low interest rate.
It's a great rate.
But 3.99% with points, meaning they had to pay for that interest rate. That was Friday. By Monday, that same buyer could qualify for something at 3.625 with no points. On Tuesday, we went down to 3.5%, and here we are on Friday again at 3.625. So that's what we mean by the market, the interest rate market being so volatile is the amount of changes that are going on in interest rates. And actually the interest rates are changing by the day.
So let's talk about the impact of that change in the interest rate. When that buyer moved from 3.99 plus points, meaning their fees were going to be higher at their closing. It's money out of their pocket at the closing table. But what was the difference in the mortgage payment from 3.99 down to 3.6, or was it
3.5?
3.5?
Yeah, it was almost $100.
$100 a month from whether you locked your loan in on Friday or if you did it on the Wednesday. And so let's talk about what causes those rates to go up and down. Sure, part of what the Fed is lending money for and what the baseline is for interest rates, that affects it. But what's making it volatile right now is demand. We've got a ton of people calling in right now to our lender wanting to refinance their existing mortgage because they took a mortgage at 5.5, 5, 4.5, whatever, and they're able to, they have the opportunity to get their mortgage refinanced at a lower interest rate and lower the monthly payment. And so that demand, the banks are just being inundated with those requests right now. And to stop that or to handle that demand, banks are raising the rates. And so when they raise the rate, that slows the flow. People are like, well, that's not as low as I thought, so they're not doing it. Then the bank will lower it back again to allow more demand to come in. And so the volatility that you're hearing about on a daily basis with interest rates has to do with how many people are calling them, not where interest rates are, where our Fed has placed it.
Yeah, so let's talk about what you can do as a consumer. If you're talking about buying a house, if you're in the middle of the process to buy your house, the best thing you can do is first of all, focus on your credit score. You want to make sure your credit score is continually going up, have positive recordings on your credit score. That's what we would say Credit Karma is good for. Credit Karma is good to tell if your credit score is going up or if it's going down.
Yeah.
Because lenders use different credit scores to qualify you.
But Credit Karma is not good for much else.
Yeah.
Because lenders don't use them.
Yeah.
Lenders don't rely on that score. So whatever Credit Karma says is not what the bank is going to work on.
So another thing that you can do is make sure that your lender has all of your documentation so they can be ready to lock you in at an interest rate at any moment. I'll give you an example of that for myself, and actually Matt too. Like Jake and I, my husband and I, were interested in refinancing, but it wasn't the right time, and we missed the small window of time to get a really, really low interest rate. But our lender has all of our documentation, so the minute that she calls me and said, hey, the rates dropped again, we can be ready to lock in at any moment.
Perfect. And so that's what we recommend to you. If you're thinking about making a real estate decision, anytime soon or in the next quarter even, go ahead and get pre-approved for your mortgage. And it's in your best interest. Have it done, and then when rates are in the right spot, you can take action on a property and make sure you secure it and be in a good spot for your family.
Yeah, if you need some help with that, we'll make sure to link our preferred lender below so you can take a look and apply with her.
We're Matt and Chelsea. Give us a call.